Hello everyone, I hope you guys bought the dip because we definitely did. This was a clear-cut victory for everyone here. I was very, very bullish. I tried to explain a few reasons why I was very bullish heading into Friday. In today's video, we're going to go ahead and review some of those, and I'm going to talk about what the next steps are for the market. So we're going to look at the SP500, the NASDAQ, the Russell, the bonds, and seasonality and what is yet to come. All right, so without further ado, let's get started with the video. So first and foremost, what's very important to understand is that we bought the dip and made a lot of money on Friday. So let's just go ahead and talk about what the next steps are. So seasonality-wise, this is basically what needed to end up happening. Seasonality, third week of December, there tends to be a pullback in the market. Just so happens that we ended up having a pullback basically right at seasonality. So I like how that works out sometimes. So this is the 20-year average of what ends up happening with the S&P 500 during each month. So as you can see, into the end of December and January, into basically February as well, the market is generally very, very bullish. This was a amazing opportunity for people to start leaning long according to seasonality. So now what's even better is that this is basically the holiday week. Wednesday, the market's closed. Tuesday, there's a half day. So for us to be extremely bearish while the market is in Christmas mode is not going to be the most intelligent thing to do, in my opinion. But in terms of charts, things can still be different. But just going off of macro news that we see so far, there's nothing that's very, very bearish, or there's nothing that's going to be like really important. There's no FOMC, there's no Powell. There's nothing to scare you off, essentially. So basically what we were looking at on Friday was Thursday was the advanced decline indicator, which is this indicator here. What we did was every single time we ended up tapping this line, I simply just showed what ended up happening to the S&P at those different periods. So the most recent time this ended up happening was in April. April, you can clearly see this was a good dip buying opportunity. We were leaning long here. I mapped out exactly what I thought was going to end up happening with the market, and it ended up bouncing. The prior time before that was in January. Also another bounce. We went down the line in history basically every single time we've come this low on this advanced decline indicator. It ended up being a good dip buying opportunity for the market. Now, currently, you can see the advanced decline indicator starting to sharply bounce upwards. What's even more interesting is that you can see the MACD indicator is also not as sharply, but it's also starting to curl upwards. What is most important to look at? So basically the easiest trade is done. That was clear cut, one of the easiest things to do. Friday open, I had my bull glasses on. I was saying to buy every single dip, go long. I was bullish the entire day, and the market ended up ripping to the upside from 582 all the way up to like 594. So this was an amazing bounce. Intraday, it was one of the strongest bounces that we've seen in recent history for a move like this to occur. Intraday, this was an amazing bounce. But now here's the thing, okay? Technically, the easiest trade is sort of done. According to seasonality, the market does tend to be bullish into the end of the year, into the middle of January, etc. What we need to see now to be extremely bullish is we need this MACD indicator, this orange slow-acting MACD indicator, to start curling upwards. This is going to signify a continued move to the upside. And the only way that the slow acting MACD indicator is going to start curling upwards is if this blue faster acting MACD indicator starts to rip upwards. And so far, so good. That's what we're basically seeing. The other two major levels of resistance that we have on the ES currently is, number one, the rising wedge resistance level, and number two, the 6100 level on the ES. So the rising wedge, we've been monitoring it it created a rise. The S&P, the overall market, and everything started to create a rising wedge from August. Now we were making higher lows. Great, moved. Everything started working out perfectly, and then we broke lower. Great. Now what? Essentially, so from a technical standpoint, we are starting to curl upwards. Great. Buyers held 580 on the SPY. Very, very beautiful. And you could also see that on the chart of the SPY. This is the daily chart of the SPY, not the ES. All of this 5840 to 588, 584 was major levels of support. As soon as we closed back above this signified very bullish behavior. We did not come back and retest and close below. We didn't even come back to fill this gap down here at 576. So what this is starting to look like is essentially, as long as we can remain above 587, 588 on the SPY, we can come back and retest the 600 level. And after the 600 level, then the 603 level is essentially that major horizontal level of support that we need to remain above. And all of this is going to heavily depend on large tech stocks and what they are doing. So far, we had an impulsive sell-off, a very aggressive sell-off, and then an impulsive, really strong rally buying opportunity. Currently, we're positioned very well to the long side. We went long at 582. We're good. We're good. But moving forward, 588. If we can hold 588, 590, that is going to be very bullish. Meaning, if we don't close below it, this is going to be very bullish, and this can honestly just rip back up into the highs within, a few days. But do I think that's going to end up happening? Not really, only because I really want to see us close above major fib levels. So the reason why I don't think it can happen as clean is purely because when you look at what ended up happening, where we ended up stopping. We ended up stopping at the 50% fib. We wicked above it, and then we ended up closing below the 38.2. So you can see these two levels here. And we ended up closing below both of those levels. That's not really what I wanted to see. But as long as we can hold above the 236, essentially you guys can see the reasoning why I wanted to hold above 587, 588 is because this would maintain a continued bullish momentum. Now, on the chart, it's fantastic. It's great. On the NASDAQ, similar concept. We didn't close above the 38.2, but on the NASDAQ, what's interesting is that we've been monitoring this trend line. I was talking about how retest to this daily trend line, and once again, this is a very important trend line on the NASDAQ as well. It's been acting as either support or resistance. Every time we would close below it, it would impulsively fall lower. Every time we would close above it, we would rip higher. And what ended up happening was back in November, we held it very well, and it ripped to the upside. A few videos ago, I was saying that we could have a retest back to this trend line. We had that retest. This was an amazing buying opportunity on the NASDAQ as well. So not only was the 584 to 588 region on the SPY a good support, this uptrend line on the NASDAQ also hinted at a very good level of trend line support. So now this trend line level of support on the NASDAQ is going to be 514. I want the NASDAQ to remain above 515, 516 for a continued move up. On the IWM is still very beaten down. It is a good sign. It is a very good sign, in my opinion, for a potential bounce. The fact that the IWM is still showing this weakness. So if the IWM, let's just think about this for a second, okay? if the IWM was at all-time highs and the market, the SPY and the QQQ were at lows, that would be way more bearish in my opinion, because eventually, right, say for example, if the IWM started to pull back, then the NASDAQ and the SPY would fall here and also start to pull back. That's my thought process, right? So now the fact that the IWM is being beaten down like this is a glimmer of hope for bulls, in my opinion. Because as soon as the IWM starts to get a bid, the SPY can also catch a bid, and this would add to the bullish behavior in the overall market. Now, I said a lot for the past 10 minutes. Let's just take a break to basically figure out what is going on. So the SPY is heavily dependent on the large tech stocks. I mentioned the levels that the SPY needs to hold. I mentioned the level that the NASDAQ needs to hold. And I also mentioned how the IWM has room to go to the upside. And you can see the IWM is very overextended to the downside here as well, based off of the Bollinger Bands. So we're opening and closing outside of the lower level of the Bollinger Bands multiple times in a row. But personally, right? Personally, I would be very cautious to start going aggressively long on the SPY specifically, unless it can hold above 587 to 588. If we get a pullback down to that level, the 588, that zone, the 587, 588 zone, is going to be the local bullish and bearish support. If we start to close below that, then there is a good likelihood that we can end up retesting this, that we could start retesting this gap here at 576.60. And so that's basically it. So that's currently what I'm looking at. The next things that we could take a look at are the large tech stocks. So for example, if you guys looked at Apple continued to make highs. This is a really, really good sign for the overall market. Apple didn't care. Apple was making new highs. Meta held support. So yes, Meta had a pullback. It held this 585 level of support very, very well. Do I want to start going long Meta here? No. But it stopped at this level. And in a place where it could have continued to vomit, it stopped, which is very, very good. What's also very interesting is that NVIDIA had a monstrous day. And every single time recently, when NVIDIA was showing strength and NVIDIA started to really, really bounce aggressively, the market ended up following through. So now, is that what's going to end up happening with NVIDIA? Are we going to end up showing a lot of strength continued? This is a really bullish. This is a very, very bullish setup on NVIDIA, in my opinion, because number one, we got a crossover on the MACD on the daily. We just crossed above on the MACD, and of course we made a local low and we started to close above these levels. Technically, this is very bullish. If we can close above this 23.6, back above 137, most likely this is it's going to just continue and we can see 140, 145. AMD, however, is not showing a lot of weakness. Obviously, it's showing a lack of buying pressure, right? But we're not getting any vomits to the downside. This is also a good indication. It's not the most bullish sign. Obviously, it's not like we got to close above these major levels of resistance. But it's a good indication that we are failing to show a lot of sell-off. These two things, so NVIDIA showing strength and AMD not showing a sell-off, technically it's bullish. Okay, technically. It's a good sign, but it's not the AMD is obviously not the most bullish at the moment. We're failing to close back above this downtrend line. Do I want to start going bearish on AMD down here? That's what we have to look at. In this moment, would you rather be bullish or would you rather be bearish? personally, this it's tough. It's tough to choose the bullish side unless we can close back above this trend line. To be honest, unless we can close back above the trend line, it's tough to just automatically buy because it can continue drifting off lower, and we can just hug this trend line and just continue to slowly bleed lower. Do I want to go short? You could go short with a tight stop loss for to follow this bearish momentum, because it's clearly bearish momentum. I'm not over here like, oh yeah, that was the bottom. We could still fall lower. That's not what I'm saying. But from a risk reward standpoint, you want to have tight stop losses if you are trying to go short here, because we can have a ripper. And if you don't have a tight stop loss, you're just going to be short at the bottom. The reason why I am wary of going short here is because we already fell very dramatically. From this most recent high in October, we are down 30% on AMD. Is this now the time to start going short? That's why I'm saying it's difficult to start aggressively shorting here. But it's also difficult to start aggressively going long here because we have not closed above the trend line. It's better. I'm not a financial advisor. This isn't financial advice, but it's better to start looking for dips. Does that make sense? Just purely looking at it logically from how much we've fallen already. It's better to start looking for dips. So now these tech stocks are going to give a few mixed signals here. Netflix looks decent. Netflix looks pretty decent, okay? Amazon also looks pretty decent. It looks pretty decent. We can see a retest of 230 on Amazon. Netflix looks pretty decent as well. Google also looks decent, okay? Google also looks pretty decent. We can see a retest of 195. We close above 196. This should continue making new all-time highs, in my opinion. Google looks pretty decent. Now, the issue is Microsoft. Microsoft does not look decent. Microsoft looks like the friend that your parents tell you not to hang out with. This is not something that I would want to go long, in my opinion. And Microsoft just doesn't look like a great setup to long. And, it just looks ugly, right? There's better long opportunities that we're seeing right now in these other stocks. That's the only issue here. But it is a very, very good saving grace that Apple is making these highs. And then, of course, we could take a look at Tesla. Tesla is also similar. It's not showing an aggressive sell-off, which is good. Tesla also looks very similar to Microsoft. Doesn't look great. So we can easily still see 400 on Tesla. And even if Tesla has a very dramatic 5% day, the market overall might have a slightly red day or, some sort of a pullback, but it doesn't look like a great time to go long on Tesla for something short term. I would much rather wait for a pullback on Tesla, maybe to the 390s, upper 380s. That would make for a much safer opportunity, in my opinion, for another rip upwards on Tesla. So, with that being said, to take inventory of everything, there's tech stock. So Apple, new highs, continuing to make highs. NVIDIA, strength off the bottoms. Google, Amazon, showing some strength. Netflix, somewhat decently showing strength as well. Overall, and the NASDAQ closed above its trend line. The easiest trade is done. Buying that dip on Friday, that was the easiest trade. What can happen now, we need to see if the bullish momentum is going to continue above SPY 588, 587, and above the QQQ above 517, 516 area. So now this is why we look at the VIX, guys. The VIX, this was such a clear-cut, amazing opportunity to see that there was going to be bullishness in the market. When the VIX is this extremely ripping to the upside, it never sustains itself. The VIX is very important to monitor because it has an inverse relationship to the market. When the VIX is rising like this, the market should be dropping, right? But when the VIX just rises like this, it's getting multiple closes outside of the upper level of the Bollinger Band, it never sustains itself. This was another beautiful reason why we were very bullish on this dip. The VIX and this advanced decline indicator, man. And it worked out really, really beautifully. You can see now that the VIX closed below 20. And it can come back and retest below 18 into back this 16 level. This can still happen. But according to equities, according to the S&P, bullish momentum can continue. If there's ever going to be a time to be extremely, extremely bearish in the market, it's not now, honestly. Like the risk reward, of course, this is bearish momentum. This is clear-cut bearish momentum. When you're looking at it on SPY, if we get a retest at 598, if we get a retest below between the 50% fib, 595 to 598, that's going to be a much, much better opportunity for people to sell their longs, because that's like just thinking about it logically. If you bought the dips here at 582, you want to sell at a level of resistance. Where is the level of resistance? Between the 50 and the 618% fib. So people already sold a bit at the 50% fib. That's why we had that impulsive sell-off at this level at 595. But if we can continue between this 595 to 598 zone, this is where bears are going to want to try to short again. And it's primarily it's going to be a place where longs are going to want to look to take profit. When a bull looks to take profit, even if you're looking at it from a day trading perspective, if you want to take profit at a position, generally bears are going to want to also short that position, knowing that bulls are taking profits there. Does that make sense? So it works hand in hand. This pocket, 595, 598 is going to be a very major level. If we can close back above this, then new all-time highs are almost inevitable. Like, I would be very, very shocked to see us not at 620 within the next few weeks if we close back above this. Because the overall trajectory of the market, especially once we close above the 618% fib, the odds of us having a bear flag dramatically decreases. So currently, right, from a technical standpoint, this is a bear flag. Okay? Sorry, wow. This is a bear flag. Great. All right, technically this is a bear flag. Once we retest this, and if we close above the 618% fib, the percentage chance that we end up breaking below again becomes drastically reduced. And then I think it drops to about like 85% chance that the bear flag is not even, it's nothing. So if we close above the 618, then it's very difficult to be bearish, in my opinion. But we're going to continue monitoring it. A lot of it has to do with large tech stocks. So far, the winners of the large tech stocks are either showing a bottoming or Apple is continuing to show strength. And then the third thing that we looked at, last but not least, is the junk bond and the TLT. So as we are showing strength in this, right, the more aggressive strength we see in this, the likelihood of a bottoming out process or weakness in the market occurs. So we saw an impulsive rip to the upside above these recent highs right here on the 19th. We saw a rip to the upside. So we saw an impulsive move to the upside over here in the bonds. This was that impulsive move to the downside in the SPY. And we ended up selling off afterward as well. This signaled a really, really good buying opportunity. So now, going back, if this continues to show strength, which it technically is, we're still showing a lot of strength here. This is one of the major things that is still an issue. Because if the TLT, if the junk in the TLT started to show weakness, this would be a much easier position to be long the overall market. But the fact that the JNK TLT is still showing strength here, not a good sign. It's not an amazing sign for bulls. Okay. So I hope this makes sense. I gave you guys the levels. I gave you guys my analysis on the large tech stocks. Amazon, Google, Netflix all looked still pretty good. Apple still looked pretty good. NVIDIA also did. Tesla, AMD, they still have some room to go. And this junk TLT is still showing strength. So as this continues to show strength, it still shows that there's underlying weakness in the market. And that is the one thing that we have to take a look at and we have to continue monitoring. So, yeah, man, I hope you guys enjoyed. I hope you guys bought the dip. I hope you guys made money. We are going to continue doing well into the end of the year. And hopefully for this holiday week, we won't see any major whiplashes or major pullbacks in the market, especially because this is sort of going to be a very low volume week. Tuesday's a half day. Wednesday, there's no market. Thursday, Friday, people are going to be on vacation. And then next week, it's going to be New Year's. So, yeah, it's going to be low volume, good opportunity, in my opinion, to start just overall leaning long. Honorary mention, GameStop. GameStop is holding levels of support. It's still showing strength. GameStop is about to cross above the MACD indicator as well, showing strength. We're holding the 28. We're holding the 27 levels on GameStop. I would be very shocked if we don't see $38 to $40 in the next few weeks. That's just me. We need to continue seeing, obviously, if buyers can step in. But so far, GameStop looks pretty good. And it should get some sort of rip to the upside, especially with the MACD indicator. Things are showing bullishness. But, yeah, with that being said, hope you guys enjoyed your weekend. Hope you guys enjoyed this video. If you've made it this far, I really appreciate it. And love you guys. All right, so I'll see you guys bright and early tomorrow morning. If you want access to all of my trades and everything as well, the link to join is down below. So I hope you guys have a wonderful rest of your Sunday. All right, love you guys. Have a good one. Take care.